Welcome to the Keiser Report. I'm Max Keiser. Hey, something has got to give. Stacey.
Max. Yes, we've been talking about this discrepancy, this conundrum between rising stock markets, rising property prices, crashing Baltic Dry Index, crashing oil, crashing precious metals, soaring dollar. Something's got to give, right? And this tweet and the chart that goes with it kind of epitomizes it for me. And it's from Jeremy Olshan from Market Watch, and he says Americans may be souring on McDonald's, but investors are still loving it. So you can see from the chart that McDonald's stock defies U.S. sales drop as same-store sales plummet from 2013, but the stock price continues to stay flat or a little bit rising.
Yeah, it's market failure. It's market failure, basically. There's no correlation. There's nothing that ties economic activity to stock price. Now, over the history of stock markets and economic activity, these two are not necessarily in sync. A lot of times when the economy is sinking, it means the Federal Reserve is going to ease up and allow more money to flow into speculation. And a lot of times you see the stock market go up in anticipation of bad economic numbers. But we've gone way beyond just this type of anticipation of easier money. We're entering a period now which I call the Roman candle phase of economic activity, where every single metric and vector of every single price of various stocks, commodities, currencies are exploding and going down their own rogue path. There's no correlation whatsoever at all. The genesis of this, of course, comes from central banks who stopped performing their duty of attempting to moderate the worst excesses of speculation. They gave up on this 15 years ago, and now we're at the end game, where we're just looking at a system that is essentially exploding in front of our very eyes.
Well, there used to be a saying, don't fight the Fed, and that was about the bond market. Now it includes the equity markets and property markets. You don't want to be, you're basically everybody's on the side of the Fed, like thinking that the Fed's on, if you're on the side of the Fed, then the Fed's on your side.
Bill, let me jump in
you
for a
can't
second.
lose.
Because when you say, well, don't fight the Fed, you know, primarily it applies to all financial assets, stocks, as you say. But we're entering a period of negative interest rates.
Yes.
Where these central banks are charging people to keep money at their institutions. And this is happening on the retail level as well in Europe and now in the UK and in the United States. Banks are going to charge folks for keeping money at the bank. So forget about getting no return on your savings. Forget about getting any kind of positive return on your savings. That ended 10 years ago. Now it's negative returns. This is a form of outright confiscation. So we're not talking about capitalism anymore. We're not talking about free markets anymore. We're talking about state-sponsored wealth confiscation, which is a dictatorial nightmare.
You know, there's a notion of the oil curse, or the commodities curse, for countries where you have so much oil, like in Saudi Arabia, you don't need the people. Here in the UK, we have the debt curse. So the debt is what keeps this economy afloat, and therefore debt issuers are the ones that are coddled, and they become the elite and the oligarchs. So I want to look at a headline regarding the debt curse here, and we're going to look at the oil curse in the second half of this first half. And here, George Osborne's deficit reduction plan requires unprecedented binge and personal borrowing. According to the small print in the latest report from the Office for Budget Responsibility, the public is forecast to add to its pile of unsecured lending, which includes credit card debts and bank overdrafts, by £360 billion over the next 5 years. If the public fails to spend, then growth would collapse and the government's deficit would likely be to start increasing again.
Well, the theory is that if you create a debt stick big enough, you can use it like Archimedes, inventing leverage, essentially, or demonstrating the power of leverage, to move any amount of weight, in this case, the UK economy and the global economy. They're using leverage, that stick, to try to create GDP growth. But that stick that they're using is made out of Jell-O. It doesn't work. They're trying to move a mountain with a stick made of marshmallow. Yeah. So they keep trying to wedge this thing and move the economy forward, but there's no contact. There's no point of contact between Fed policy and fiscal policy and the economy. These two are now completely separated in the bubble chamber that is the virtual nightmare of our particle-accelerated economy and mutually destructive assured end game due to the disconnect. Basically, these people are morons. Okay, that's the bottom line. They're morons. Osborne or the people in America who run the economy are not intellectually capable of whipping themselves out of a wet paper bag.
Well, I don't know about the Tories being unable to whip themselves out of a wet paper bag. That's something they kind of excel at, but in a different sort of arena. You know, everybody's stupid in terms of what I'm talking about here. Right in the UK, even when their currency, the British pound, for example, fell by 25% in 2008, 2009, it didn't result in an increase in exports because there's nothing to export. They only have debt, and they've run out of ideas. And you can see that in what this report says, that the 360 billion figure represents a 41 billion increase on the OBR's forecast just 9 months ago, and would take households' unsecured lending as a share of total household incomes to a record 55% by 2020. That would be well above even the pre-financial crisis unsecured debt ratio of 44%. So what they're saying is, like, the only thing that could save us is to become even more unstable, even more leveraged, even more precarious.
We live on a planet made of debt, and these policymakers are trying to get the planet to move out of its orbit of death by using more dynamite in the form of debt. So here you have dynamite that they're trying to explode in the economy to move the orbit of planet debt. You know, there's so much debt that there is no external force that can be used to change the path of this debt planet, or I should say a debt meteor is heading for planet Earth. And you cannot now change the path of this meteor of debt. Earth is in its pathway. It's going to collide with Earth in the form of higher interest rates, and the entire globe is going to shatter into 5 trillion pieces of bad credit rating. And everyone is going to be stuck there with absolutely nothing except a few gold and silver coins in which to buy their daily grist.
So here we have an economy where the only solution always is presented to the people as take on more debt. So we're going to look at somebody who's taken on more debt, and yet they were not celebrated and hailed as heroes saving the economy. Student killed himself after £100 payday loan debt soared to £800. A struggling student overdosed on slimming pills after taking out a payday loan, which saw a £100 debt soar to £800 in just 3 months, an inquest has heard. So he was a student working as a bartender in a pub, like most people in this economy. If you're working for a living, it's generally in the service sector here, and they have small incomes here. The debt increased enormously, but it didn't help the economy. In fact, it resulted in him killing himself.
All right, well, he needs slimming pills because the one thing that the government does make sure is completely accessible to folks here in the UK is cheap booze. So, of course, it's highly caloric. So here's a poor kid. He's becoming overweight by drinking all those cheap calories. He goes into debt to buy slimming pills, which of course are methamphetamine disguised as some kind of prescription drug. And then before you know it, it's a deadly cycle, which ends up in a death.
The fact is, the Tory party, the Conservative Party, the ruling party here in the coalition government is, they're very allied with these payday loan companies. They do not say which payday loan company this is, but you know, we probably know which one it is, but the inquest did look at this payday loan company and say they did not act illegally.
But every payday loan company is tied back to the Bank of England. Bank of England is the mother of all payday loan companies.
Yeah, sure.
So the Bank of England, until it steps up and acts responsibly, expect more suicides.
Well, it's suicide for the entire economy because they have to do something else, because debt has reached saturation point. It's too much as a percentage of their economy. Now we're going to turn to another place where the oil curse exists, and it's too much perhaps percentage of their economy, and that's Norway, which has been you know, one of the cash-rich places which have provided capital for the global debt schemes and Ponzi schemes around the world. But oil is 20% of the Norwegian economy. That compares to Russia, which is oil is 16% of their economy, their GDP. So here in Norway seeks to temper oil addiction after OPEC price shock. A 39% slump in oil prices since June is killing jobs in Norway, which relies on fossil fuels to generate more than 1/5 of its gross domestic product. In the past few months, Norway has lost about 7,000 oil jobs, and SAFE, which is the oil workers union, said this week if it was up to the government to reverse that trend, Prime Minister Erna Solberg says protecting oil jobs will ultimately make it harder for the economy to wean itself off of its commodities reliance. So that's the way to respond to it, is this, here's, in the crisis of the oil prices collapsing, here we could say the economy needs to shift itself, maybe reduce the percentage of the economy that is dedicated to oil. Here we should reduce the sector of the economy that is dedicated to debt and think of new ways to earn income.
Well, these two things are highly correlated. Oil and debt for the last 30 years,
Yeah.
since the petrodollar, going back 40 years. So planet debt is grown at the same time as the global energy sector, which has become the dominant commodity traded in the world and the dominant financial product traded in the world. For every one barrel, for every dollar that's tied up in a physical barrel of oil, there are $60,000 tied up in derivatives tied to that barrel of oil. So that's London, and it relies on super cheap interest rates by the payday lender of choice, the Bank of England. Then you have countries like Norway and other oil-rich companies that are now suffering a double consequence of falling oil prices and an unwinding global derivatives debt bomb. In
fact, Mexico and Nigeria are also suffering crises. They have in Mexico, for example, the peso has fallen 16%. The government wants to intervene and support the peso because they're terrified because of their own peso crisis that they had back in the 90s, which you remember, and that fell 37% at that time. But because they import much more and don't have as much cash on hand, they're attempting to intervene. But a lot of it is caused by the derivatives as well, because it accentuates on the downside on this oil crisis.
Well, centrifugal forces, you go to the theme park and the spins around and you're pushed against the wall and things are forced out to the edge. Centripetal forces, which is the opposite of centrifugal force, means things are pushed into the center. So if we're entering a period of de-dollarization and de-globalization and falling oil prices and bank failures, then all those forces that were pushing things out toward this kind of fake growth are now pushing everyone in. And of course, that's exactly what happened pre-World War I. It also happened pre-World War II. Everyone is now being jammed together, and a lot of people, they get antsy, they get nervous, they get violent, and this is exactly the precursor toward World War. And so this is the situation we have to look forward to in 2015. Stacey, we got to go. Thanks so much.
Well, Max, something's got to give very soon. We've got the real world crashing. We've got the debt curse rising.
I thought you were going to do like the Macarena there for a second. Remember that dance? Anyway, stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to crowdfunding pioneer Simon Dixon, founder of one of the first equity crowdfunding platforms in the world, banktothefuture.com. Simon, welcome back to the Keiser Report.
Good to be here. Thanks, Max.
Simon, let's talk about crowdfunding for a second, because it's ready now to take the leap forward to being really relevant. I mean, the current platforms, the equity platforms here in the UK, there are a couple that gotten a little attention. There's yours. And the rewards-based crowdfunding sites in the US. They're really building on technology that was 15 years old. I remember I filed a patent on crowdfunding back in the year 2000 and never really got involved in it until now, because with cryptocurrencies, finally crowdfunding is ready to take a leap forward and realize its true potential. And as you wrote the book here, Bank to the Future. You practically invented crowdfunding, equity crowdfunding here in the UK. You are the man. Now with cryptocurrencies, are we ready to see the true potential? None of these posers and Johnny-come-latelys and idiots that are currently in the space. This is true. Bank to the Future, Startcoin, cryptocurrency. Cryptocurrency can take us to the next level. Simon, your thoughts?
Yeah, so what we're seeing now is the collision of lots of different technologies. When I wrote the book, the first draft several years ago, we didn't have a Bitcoin, we didn't have crowdfunding. I had to get to the second draft till I started discussing these things. But now what we've got, forward a few years, we've had billions raised through these platforms now. We've had markets like Bitcoin, which is now a $5 billion market. And we're seeing these different technologies now colliding. In the book, I remember talking about the three things that need to change. You've got banks that own people's money, as you saw in Cyprus. Now we've got people that own their own money through their digital wallets in their phones. You've got banks spending money. Now that's changed because crowdfunding platforms, peer-to-peer lending, people are directing the flow of their own money. And you had banks creating money. Now you've got individual people that are creating cryptocurrencies as a force for good. And what we've seen with things like Startcoin is cryptocurrencies being designed specifically with the intention of funding projects, funding businesses, and changing the economy, the people deciding what gets funded.
All right, Startcoin, it's part of StartJoin, which is the crowdfunding site that I started. And I want to talk to you right now about politics in the UK specifically. There's a two-party system that's been in place for a while. Everyone's quite upset about the politics here in the UK. It's run by complete charlatans. Osborne, Cameron, Nick Clegg, Miliband, Farage. They're all cut from the same cloth of let's privatize everything, let's bow to the central bankers, forget the people, forget economics, forget anything having to do with egalitarianism or financial soundness whatsoever. Let's just keep the kleptocracy going. But crowdfunding and cryptocurrency and politics are totally disruptive. In other words, if I want to take StartJoin and Bank to the Future and combine these two with a cryptocurrency, can we do to politics in the UK what Uber has done to the taxi market, what Airbnb has done to the hotel market, what P2P file swapping did to the music industry? Can we totally transform politics in the UK, you, me, and our crowdfunding partners? Can we just rip out the heart of these kleptocrats and just start over again, Simon?
Well, what we're seeing right now, as we said, we've got the technology all exists. At the moment, it's early stage in terms of, in things like Bitcoin, that's kind of where the internet was in 1995. Entrepreneurs are developing stuff, but that's all being funded through people right now. So because it's being funded through people, you're seeing innovation at a rapid pace. Anything goes. The people are deciding whether they want it. So these technologies are now becoming, they're almost like self-fulfilling prophecies where the technology is being used to fund development in the technology. So you're seeing, this can totally change so many things. And now you're seeing, technologies like blockchains, which are very geeky for people to understand, but now real user cases are sitting on top of those. You can have transparent voting. You can have political campaigns being funded through the crowd.
Yeah, let me stop you right there. Transparency in voting. Political campaigns funded through the crowd. I'm crowdfunding a legal opinion with our lawyers at StartJoin right now to come back to us and say, okay, here's a current UK campaign finance law. How do we work within it on crowdfunding? How do we transform these laws, or how do we work with those that are in place to make things different? Because I noticed that this crowdfunding potential hasn't gone unnoticed by the likes of Boris Johnson, who, the mayor of London, who's now given £5 million to a competitor in the equity crowdfunding space here in the UK. That's completely uncool, to do this, to single out one company to do this for. And as a result, now I've been mobilized, you've been mobilized. We're going to crowdfund someone to take Boris Johnson out of office and start to transform politics in this country using media, technology, crowdfunding, crypto. I mean, Boris is shameless, crony capitalism. This is not going to stand. He's right over there within a drone's distance. You can see his office right there. We're not going to let this go by, Simon.
Well, one of the things that's happened over the last years is I've been invited everywhere from governments, politicians, to talk about crowdfunding. In fact, I was invited to lunch earlier this year in that building with Boris Johnson, and at the time he didn't know what crowdfunding was. I was telling him about crowdfunding, the potential it can have for London, the potential for economic growth, and I remember it was only he loved the Bank to the Future brand, and the very next month he launched the Bus to the Future brand, and he's now talking about crowdfunding. I haven't received any credit for that, so I'd love to get my credit still.
Forget the credit, Simon. Yeah. We're going to take him out of office, and this is really happening because StartJoin is now on your site, Back to the Future, and people are putting up £100, £200, £500, 2 Bitcoin, 3 Bitcoin, 100 StartCoin to finance the growth of our technological enterprise, StartJoin. We're raising £40,000 in equity on the site because that's going to help us take on the corruption in the UK. And we're going to explore how crowdfunding can change political contributions and campaign finance in this country. Because we're going to put, let's say Russell Brand did run for mayor. How do we make that happen for real? We want somebody who's going to represent the people, not someone who's going to represent foreign interests and bankers like Boris Johnson, right?
Well, the key to all of this is that Crowdfunding, digital currencies, it opens up the purse strings. It's financial inclusion that we haven't seen before. And when you have financial inclusion, you give a voice to everyday people that can now direct finance. And that can be pulled together with lots of other people rather than having full control to those who control the full purse strings, as banks have had a monopoly on money creation and digital money creation. And now that's all changing. And that's the trend that we're seeing right now. And that's where, and you know, we're at its infancy right now. People need to participate in these platforms. They need to have their voice. They need to get engaged. And the whole infrastructure is being built as we speak.
Yeah, I want to emphasize the point that this is a revolution that's really happening, not in name, but in actuality. And to underscore this point, you have technologies and platforms like Uber, which is totally transforming the global taxi market with 1 million new jobs created for drivers around the world as a result. Just did a deal on Wall Street worth $40 billion. Airbnb, transforming the hotel industry around the world. They're worth many billions of dollars. You've got the P2P file swapping, totally transformed the music industry, totally transformed the video industry. Sites like Google, YouTube, raising billions and billions of dollars. Now, we're going to apply these techniques to politics in the UK. So politics and crowdfunding have never been brought together in this way. It's expressly going to attack the heart of darkness that is at the core of the UK political establishment. We're sick of the pedophile scandals. We're sick of the banks stealing money hand over fist. We're sick of the cozy relationship between these two entities. We're sick of the royal couple over there in America raising money for God knows what, to deflect attention from the massive pedophile scandals here in the UK. We have the ability, the technology, the finances to recreate government and economy in the UK right now. Simon, we've actually shot a pilot for a new TV show based on this very thing, which is being circulated amongst international broadcasters right now, called The Crowd Factor. So this is really happening, Simon.
Well, as we said, we've got the digital currencies, which is opening up money creation. You've got the crowdfunding, peer-to-peer lending movement, which is allowing people to have a voice of where money goes, what gets funded. And now you've had a trend of new media. And so now when you combine all these together with Crowd Factor, we can give people the distribution and the channels that they need.
The new show.
The new show, yeah, and give people the new, the traffic that one needs in order to get lots of attention to their campaigns.
Yeah,
so it's like a perfect storm. It's like a triple punch.
Yeah, it's like you got to combine media, finance, and technology. I've always said that going back 20 years when I created, the Hollywood Stock Exchange in Los Angeles, completely changed Hollywood, completely changed. It created something called the prediction market industry. I also filed a patent on crowdfunding at that time, which I filed another patent on crowdfunding in 2003 on crowdfunding income streams. So, but I've been doing these other projects, like Karma Bank, to kind of keep myself amused because I haven't decided to get into the main arena and, do some serious elephant hunting until now, because with cryptocurrency, Startcoin, Bitcoin, Bank to the Future, the obvious corruption in the UK, the combination of massive media platforms like we have here and on other side media platforms, we have the ability now to actually stage a proper revolution. We have people like Russell Brand who are emerging as leaders. He's a charismatic guy who speaks from the heart, who's got a frickin' nut. He's got a bean. He's got some of the stuff up here. He knows what he's talking about. These are the people we need to lead the revolution. Bank to the Future is a big part of it. Talking a little bit about cryptocurrencies, just in their short life, they've totally changed economics as we know it. Talk a little bit more about it.
Well, the thing with cryptocurrencies is that people are making the mistake of thinking that they're simply a currency. A currency is one element of it. The most important element is the technology behind it. And, much like before people knew web browsers and Google, there was something called HTTP and IP, and it was geeky and no one understood how it worked, and it was clunky, and the early adopters were criminals and all that stuff. We're seeing the same thing with Bitcoin, but now the technology is becoming less clunky. It's having user cases which are very, very useful and very, very disruptive. And so it's now come its time. You were a victim, Max, of being an early adopter before the technology was able to be used. But when now the next years ahead are the vital years where this technology is going to come to be. It's not talking, it's not filing patents, it's now actually happening, it's funding projects. It's a vital source for the economy in terms of the amount of funding that we can get into businesses and people that can create jobs and change the economy. If you look at the real economy is laying off. You're seeing, Lloyds Bank laying off 2,000 staff. You're seeing different financial institutions doing all this. In the Bitcoin economy, people are hiring accountants like crazy. They're hiring bankers like crazy, utilizing that knowledge that they had for something less corrupt and more productive.
Yeah, I was early on a lot of these ideas. The innovators are the guys with the arrows in their back, they say, because they're trailing a new path. And I've always allowed my visions and ideas to take me forward, even if it might be ahead of the crowd and even too far ahead of the crowd. But I think you make a good point there, that now, finally, all these things are converging into this magical moment, this once-in-a-100 years moment, where the people are anxious for a change. The government is too busy scratching each other's back, or in this country, doing something a lot more intimate than that, to allow for any change, and the technology is there and it's cheap. So I look forward to things going forward from here. Simon Dixon, you obviously are practically the inventor of equity crowdfunding here in the UK. Kudos to that. We'll have you on again soon.
Thanks for having me, Max.
All right, well, that's going to do it for this episode of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Simon Dixon of banktothefuture.com. This is the seminal book written on the topic. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.